Good morning, everybody. It's 23rd of August. We're Signal Centre Talking Bull. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen. How are you both?
Good morning.
Very well, mate.
Good.
Very well, thank you.
Anything to do with football, Jamie? Or sorry, Steve.
I wasn't going to bring it up, but I'm in an especially good mood this morning after a resounding victory yesterday. Steve, any comments on that?
Yeah, resounding is probably one of the worst words I could describe it as. In fact, having 30% of the possession and looking pretty poor for, I would say, 80 minutes of the game. Yeah, I think you just better watch out for what's more. There's more of that to come, I think.
That's
You sound very bitter this morning, Steve.
Yeah, what annoyed me yesterday, I read the reports after the match and listened to the commentators, and they were started going, "This is unbelievable, Man United. What a sort of like they played unbelievably," and they were sort of by far and away the second best team apart from about 10 minutes of the match, and it's just sort of like made me chuckle a little bit when I read the reports this morning as well. It was all a bit the same. It's as though all the problems have gone away, and I think most diehard
they'll be back.
United fans know it's like a bit of a flash in the pan.
Yeah.
I mean, I think overall they probably deserved something out of the game. Without doubt, Liverpool didn't play very well at all. But I mean, with 9 first-team players missing, I'm not surprised.
Okay, we better move this on in case we start losing followers with all this chat.
Yeah, exactly. Football.
Yeah, sorry about that. That segue there, guys. Let's get on to the latest headlines and what's moving markets today. What's really important, rather than this bantering backwards and forwards. So, market highlights. Gas fears continuing to intensify in Europe. The immediate focus is remained on the supplies and was yesterday as well, following an announcement from Russia that gas supplies through the Nord Stream 1 pipeline would be suspended for 3 days from August the 31st. Russia also announced that supplies thereafter would be at 20% of normal levels. Following the announcement, there was a fresh surge in gas prices to a new record high. I'm sure we'll take a look at that in a moment on the charts as well. In terms of what else is happening on the macro side of things, Bundesbank have warned of a recession. In their latest monthly report, they stated that a recession is increasingly likely. This is the German central bank, with a high degree of uncertainty over gas prices and a sharp increase in prices overall, likely to weigh heavily on households and companies. The bank also stated that inflation will continue to accelerate and could peak above 10% this autumn. I actually saw some reports yesterday as well that the UK were predicting nearly 18% inflation at some point while this inflation run continues. In terms of what's going on with the US yields, the inflation break-even rates have increased to a 9-week high on Monday, which helped put downward pressure on treasuries, and the 10-year yield moved above 3% for the first time in over a month. And as a result of all of this, risk appetite has deteriorated. We saw the energy fears and the inflation concerns being a key element in this, and the S&P posted a decline of over 2% yesterday. In terms of currencies, the euro slid to a 19-year low as overall confidence in the Eurozone outlook continued to deteriorate, and the euro was subject to further selling, with another dip below parity to reach a fresh 19-year low against the US dollar. The US dollar index surged and traded just shy of the 19-year high. We have touched that this morning again, so very much on the front foot and showing that clearly people are de-risking. In terms of the global PMIs, we mentioned about these yesterday, but they come out today. The economic calendar was pretty empty yesterday, but the PMIs will be closely watched. We've got the German number out very soon, and then followed by the UK. And then we've got the US, I believe, tomorrow. So we've also got the Jackson Hole Symposium, which we mentioned yesterday. For those that don't know, this is when all the kind of central bankers and economists get together to discuss policy. Jerome Powell is expected to speak on the 22nd, although the event itself kicks off on the 25th, and his comments will be very crucial for market direction. So lots going on, lots of fear in the market, it would seem at the moment as well, possibly an end to this summer rally that we've seen take place over the last few weeks, with a lot of markets now starting to roll over. We'll take a look at the charts in a moment, but Steve, you want to kick us off with a look at crypto maybe? Is that a bit of an indication of risk at the minute as well?
Yeah, it feels like it. I think Bitcoin's got a few more problems than everything that's going on in the world nowadays. Yesterday's bearish outside candle, sorry, last week's bearish outside candle for me is pretty significant now. If we don't manage to get back above the 25,000 level in the next week or two, then this should exaggerate, the downside should exaggerate into more serious support levels. On the daily chart, we've got a we had a tentative upward trending support line, these 2 points here, and we've broken through that and we're hanging around it. Now, this little bit of stalling that's going on around here is a little bit clearer on the 4-hour chart. When you really break it down, ooh, let me just get it. This is a bearish flag formation, and so for me, it's pretty important what happens once this breaks. So this level of what's the 20,785, that looks like the low there. A break of there, and potentially the measured move target for this. Oh, let's not extend that right. There we go. Would be a move down to the lows, the multi-year lows that we picked up back in June. So this for me is setting up for a bit of a sell-off. And if we do get the dollar strength continuing, the equity story continuing to sort of like see losses there, it's gonna feed through into Bitcoin. Ethereum, similar sort of formation forming. We've got this bearish flag formation again. That would probably have a measured move target somewhere around the support coming in at 1360. Resistance at the moment coming in at 1650. Really need to get back above there to stave off these concerns from a technical perspective. So yeah, look out, crypto. We're going to get you. The similar sort of formation we saw from a weekly perspective, a bearish engulfing we saw on gold last week. Again, the dollar strength being the sort of like the main reason for this, and this has allowed our bearish channel to continue. As I said yesterday, I fully expect a retest of this 1680 level. Currently trading around 1735, so it's a little bit of a way off, but we managed to get down to 1727.5 yesterday. Before buyers came in. But yeah, gold very much on the back foot, and I can't see that changing, especially with the dollar as strong as it is and no sign of the dollar slowing down. Silver, similar sort of formation, although we did manage to post a bit of a shooting star, a bit of a bullish hammer. The shooting star would be at the top of a rally, a bullish hammer at the bottom, and although we're still on the back foot this morning, 1895 trading. Support in silver would come in at yesterday's low at 1872, but below that 1814 is the significant area of support, and above 1955. Copper remains pretty elevated at the moment. We got resistance coming in at 370, support coming in at 355, which we managed to bounce off the other day, forming a bullish outside candle. So that was pretty decent. But we've had 2 hanging man candles, so doesn't look great for any follow through. Really need to sort of break that 370 resistance level. I haven't talked about oil, have I? Why am I trying to skip oil? Every day I do that. So bearish channel in oil. However, we have seen price action move higher yesterday, and we are challenging this downward trending resistance. Now, if we can actually sort of like raise that potential downward trending resistance line, or it's a little bit more solid as it was sitting. The previous support at 92.27 on WTI crude oil should be significant, and again that will be just below the spike high or the swing highs that we had at 94.28. So that's the level to watch just above. Nice reaction yesterday off the $86 mark, and Brent crude oil, similar sort of price action. Nice little rally from $92 all the way up to 96.65. We're trading there now. Resistance just above at $97, but the more significant one probably at 99.48. Natural gas, we can see, I think you said all-time high, Joe. I probably would argue that it's not. It's I've talked about these highs before. If we have to go back a long way, but we can see exactly what we've drawn on the charts from previously. We had this double bottom formation here. We also had this double bottom formation here. The measured move target for the main one between 2012 lows and 2015 lows, early 2016, is a move up to the 78.6 fib retracement level at 1156. Now, very significant, obviously, this week, breaking this multi-year high. So it's the highest levels we've seen since all the way back in 2008. What a lovely year that was, if we could all remember that far back. So yeah, that's the 1429 was the 2008 high. And yeah, marching onwards and upwards. No real sort of indication that that's going to slow down anytime soon. Daily chart, anything significant there? No, I suppose you can sort of like see this inverse head and shoulders formation. It's not the classic formation where we have a sell-off into this type of price action. That would have been a real significant turnaround. However, this is more of an extension. So further upside, support now very much in this band of previous resistance, 940 to 960, trading just below the $10. That'll be a big psychological level, but I don't think it'll prove too much of a hurdle for this natural gas phenomenon. Said the word right as well.
Yeah, well done. Nailed that. Okay, so yeah, it is all about the dollar at the minute in FX. As we know, that is trading close to 19-year highs. So let's just bring up the dollar index chart. So we broke out of this corrective channel and we have moved substantially to the upside. So you'd argue maybe a really nice bullish flag there has formed and a continuation higher has been seen. Prices are now rallying into these highs that we posted on the 14th of July at 109.29. Pretty much hit that to the tick this morning, 109.27. Actually the high that we've reached, but you wouldn't bet against that overcoming that level throughout today's trading session. That red line that we've got on the chart, we do actually have to go some way back to find when that was last relevant. If we scroll back to the left hand side, we can see that it was a previous swing high from back here in 2002. So pretty significant stuff. We've got the blue line just above it, which is the 78.6% Fibonacci retracement of this entire move here. So from the highs that we posted in 2001 down to the lows we posted in 2008. And then above that, we've got some resistance there that we've highlighted at 111.31. So potentially a cluster of resistance levels approaching. But you'd be a brave man to back against it at the minute. It is pretty rampant, as we can see, and that is really an indication that people are buying into this as a safe haven. They want to own US dollars as a way of keeping themselves out of the markets in a general sense and just finding shelter effectively. So that is a worrying sign for me, but no signs of this slowing. And of course, it's having a big knock-on effect elsewhere. Euro continues to look absolutely awful, really, in most pairs, but Euro US dollar broke down through a significant level yesterday. We saw the prices go below parity back on the 14th of July, and that level was pretty well defended by the bulls at that point. A lot of speculative money jumping into the market, hoping that parity would act as some form of support, which it did. But all in all, that was just a corrective move higher and looks to have just formed really a continuation pattern, and prices have continued to move lower. So we're trading at the lows at the moment. We're down at 99.07. And there is no signs of this slowing. So if we just flick to the weekly chart, just to put this into a bit of perspective about the last time we were here, we have to go some way back. And again, I'm sure it'll be 2002 probably. Yeah, 2002 when we were down at these levels last. So there's a swing high here, which then acted as support once it broke out. So that looks pretty decent. That's at 95.95. So suggesting that we're going to see even more downside on euro versus US dollar. So I wouldn't be speculating on this at the moment. We need to see some evidence of a turnaround and some buying support before anybody gets excited about a bounce in euro US dollar. Similar situation with cable, broken down to new lows today. We still got some way to go to the lows that we actually posted at the height of the pandemic If we go to the left-hand side on the weekly chart, or have I said that wrong? No, was that the pandemic? Yes, 2020. So down at 114.10. But again, showing no signs of slowing, broken down through support. We need to see if there is any appetite from the speculators to hold on to that support level at 117.59 on a weekly basis or daily basis on the chart. Not looking good, looking as though the dollar will continue to reign supreme for the time being. Just to go back to the euro again to highlight the weakness that we're seeing here. This is euro CAD. That's broken down to new lows today below 129.64 and showing no signs of slowing. It's a similar situation in euro Swiss. That continues to be pretty awful, really. And I think in terms of our signals on euro Swiss on the intraday basis, these have been at sort of confidence scores of 100% for on the sell side for quite some time now. So that is a pretty strong trend and showing no signs of slowing on the downside. Let's move on to the indices, because there's a little bit happening here as well. So looking at the ASX 200, first of all, we can see that rallied into or close to a 61.8% fib level from these highs that we posted in April down to these lows we posted in June. We've come up just short of it and posted 3 consecutive days of losses, assuming today ends in the red. Of course, a long way to go at the moment, but not looking great there. If we take a look at DAX, that rallied into an extension level, 161.8% extension level of this small double bottom pattern that played out quite nicely, but that's seemingly given up, broken through the short-term trend support and looking pretty ugly. Trying to maybe put some sort of fight back in today. We've got these PMIs due out in 13 minutes that may give it a little bit of a push to the upside temporarily, but overall it looks like we're going to continue to see prices range and overall remain with a bearish bias, given that the trend continues to remain one of lower highs and lower lows. Nasdaq, that failed into resistance at 13,727, posting that doji candle, which did signify a short-term top. We gapped lower yesterday and prices continue to move to the downside. Most US indices down by around about 2% yesterday. We're on the back foot again, down by 0.3% as things stand. And that looks like it's got a little bit of unwinding to do down towards support at 12,225. Overall, the trend remains bearish, as we can see here. Continues to post a succession of lower highs, so looks to be still pretty bearish overall. S&P 500, that's giving up the ghost as well, finding some support potentially around 4106, but overall the trend remains bearish and the outlook doesn't look particularly great, particularly if we're going to continue to see the dollar remain as strong as it has been. Finally, the FTSE 100, this continues to hold up quite well on a relative basis compared to everything else. As we've mentioned previously, we do have some short-term support to consider at 7491. If that breaks on a closing basis, then we may see a little bit of unwinding of that based on this short-term rally that we've seen. Still looks to be one of the worst markets really for trading opportunities. Very range-bound, very limited in terms of ranges. So yeah, just be careful if you're trading that, I think. But overall, it doesn't look too encouraging anywhere really at the minute. Jamie, what's going on the stocks?
Thanks, Joe. Yeah, I mean, I obviously wasn't here yesterday. Hopefully someone noticed. But it seemed like a bit of a bloodbath, honestly. We'll look at the heat map in a sec, but not a good day all around. But it was a good day for SGFY. This was up 32.08%. This is Signify Health, and if we have a quick look at why this happened, don't want to look at the news for Apple. We're not on Apple. Here we go. Just change that around. There we are. Tricked it. Signify Health surged as much as 41% to 13-month high following reports the healthcare analytics company received multiple takeover offers, including from Amazon. Among others, so that was what saw the boost in the price there. You can see this gapped up just after earnings quite nicely, and then it gapped up on the news yesterday. So this has been really, really strong now during the kind of, well, it's not really had a long correction from the highs we've seen, but in the general market. But yeah, moving very nicely there. Our biggest loser is AMC. What's going on here? I've got all these Fibonacci's and everything drawn up, but they're all useless. Let's get rid of that. This can become resistance though if we make this red. This, I'm not sure, maybe this is off the back of the Cineworld stuff. We can have a look at Cineworld as well in a bit. Let's see what's happening here. Sorry, I should say 41.95% down yesterday, and the volume is quite high as well, so not looking too
that's
good.
on the back of the Cineworld thing, did you say?
Yeah.
So they're
Yes.
bankruptcy.
Yeah, I guess that's bringing all cinemas down, and so yeah, I mean it's pretty rough. Let's see if we can find anything specific. AMC down 42% as the movie theatre chain's new preferred equity units began trading on the, while UK, there you go, UK rival Cineworld said it might file for bankruptcy in the US. So yeah, a pretty rough time for cinemas. I know we're talking about Top Gun, and maybe I just have to go and watch it and that will save the cinema industry, possibly. Looking at the stock heat map for yesterday's trading, you can, as we said, a lot of red across the board. This is one of the worst days. I'm not sure if there was any stats on what it's been the worst day since, but I think the Dow was down the most since June or something like that. So it's a kind of multi-month down day. You can see all the big names down pretty heavily. Amazon down 3.6%, Microsoft down 3%. Anything else jumping out? We've got Nvidia down here 4.5%. Netflix down 6%. Not a lot looking good. I think the one sector that wasn't as bad looks like energy, with a bit of greed in there, but overall a pretty horrible looking day. We'll jump into some of these big names. I want to look at the weekly closes for last week, and kind of trading of yesterday's session too. So here we've got a bit of a gravestone doji on the weekly chart for Apple, and possibly, what's this, an evening star potentially if we get a close in the red here, forming near the resistance for Apple. We've talked about the volume enough, we won't go into that again, but obviously we're going to go into it again now. This rally we've seen, not a lot of volume here, and potentially now we're seeing a bit of a top, at least for a short term for Apple, coming back down, looking kind of at least towards these levels here, of, you know, had some support around, what's this, 152. That seems to be a reasonable level to target there from the downside. We'll quick look at this on the daily chart. See two higher volume days, both above the average on these down days, and we've obviously had this gap down yesterday, so yeah, keep an eye on that. Looks like it will move down a bit further. Amazon ran right into the 61.8% Fibonacci level we had drawn here. Let me get rid of some of this other stuff, it's getting a bit cluttered. There you go, so it ran right into that 61.8% fib on the weekly chart, and it's moved lower. Volume really coming off actually at this key level here, not a lot going on, but yeah, again, we're going to see this a lot of the stocks we look at today, that gap down on yesterday's trading. Where are we looking for this? I mean, we've got, this will show up better on a daily chart perhaps, but we've got this kind of band of support here, as well as a gap fill, potentially on the earnings boost we saw, on the earnings jump. That looks like a pretty reasonable level to kind of target. Anything, we can kind of broaden out. That sort of range is where I'd expect price to move towards. Look at Bed Bath & Beyond. I'm not sure what you guys looked at yesterday on the stock side, but we obviously saw this on the way up, and now it's coming back down. It had a nice moment. Hopefully, well, we know that guy got out with 125 million. He had 25 million from his uncle, so I'm not sure I'm that impressed. I'm not impressed. But yeah, look, down below the 78.6% fib now, so all the fibs are out the window. Obviously, a lot of gaps to fill on the upside. Well, I guess the last real one down at about 620. So a fair way, that would still be like a 33% fall off from this level. So yeah, I mean, just one of these crazy stocks. We've seen it before with GameStop and AMC. They do often come down as hard as they go up. I think that's a reasonable sentence. Looking at CMC, so Commercial Metals Company, this ran right into this previous resistance level. It couldn't break above it. It couldn't do it previously either. It did wick above it on the weekly chart. As you can see, if we look at a daily chart, you can see it sold off quite aggressively after it tried to get above. Similar kind of story. We couldn't get above it again. Not huge volume on the sell side here, but the resistance has held up pretty nicely. But yeah, still not a lot of volume at the moment. That's something I'll be keeping an eye on in the next few weeks. CrowdStrike again, look at that, 61.8% fib. I think a lot of these stocks on this rally we've seen over the last few weeks have run into that 61.8 fib from the prior sell-off that we've seen. Again, no volume here. I mean, just nothing at all. Not getting close to that 20 period average. Rattle through a few more of these. Fuel cell, we've got this bearish outside candle on last week's trading. Not huge volume, but gap down obviously yesterday, as a lot of them have. We've got the support on fuel cell coming in. There we go. There we go. So at about 320, you can see it's touched it a few times. Broke above this resistance here, which we had. I think we actually might put out an idea for that, which we're probably still alive in, but that's not looking healthy. Coming back down pretty heavily there. What else? I want to have a quick look at Foot Locker. It's not one we look at all that often, but this had a nice earnings bump up on Friday, I think. I don't know what percent it was up now. Let's have a quick look. Go. So that actually moved up 20% on Friday off the back of earnings, but yep, sold off with the rest of the market yesterday. GME, you can take a quick look at. It's not been as aggressive a sell-off we've seen AMC and Bed Bath & Beyond, but this is coming back down towards this 50% fib from the entire move. Let's wrap through a few more of these. Moderna, this is a bit of an annoying one. We put out this idea around resistance. Didn't quite get a fill, I don't think. But this has moved down quite nicely. Resistance doing a nice job there. Yeah, what's that? 5 days of red in a row now. So that's looking like it could move back down to the support level we have here. We've been quite bearish, I think. Well, I'll speak for myself, on Moderna for a while. Bit of range bound action since this aggressive sell-off. Not a lot of volume, as same for a lot of these stocks, but got this key 120 level, which from a weekly perspective has to kind of hold above. It's dipped below it a couple of times, but it's always closed above. So that's really what I'm looking at and what I'm interested in on Moderna. Novavax, similar story. I mean, this is a weekly chart here. You can get rid of the fibs. They're all useless now. But you can see, I mean, if you just didn't even look at the chart and just looked at the volume, look at that, it's all volume now, you would think that this isn't looking good. You can see the real big volume weeks are all red, not a lot of green at all. So that kind of paints the picture for you. And then obviously with the chart, you can see that it's fallen off pretty heavily from the highs of 330 all the way down to 35 now. And it looks like, to me, it could keep going a lot lower. But let's follow price action and see what that says. We've seen this inverse head and shoulder on Nvidia we've talked about for a while. It looks to be kind of fading, but it's still in play for me potentially. Earnings coming up on that tomorrow after close, so that could really determine which direction we're seeing for Nvidia. What else do we want to see? Palantir, this was a really nice, another one that ran to a 61.8 fib. Didn't quite actually tag it, but then sold off pretty aggressively there. We talked about Plug Power. This is one we did get an idea out for and did get a fill on. Running into this trend line resistance and this previous horizontal resistance, they met at the same point, which when I'm looking at kind of putting out an idea, I always look for those kind of multiple factors that go in favor of the idea I'm trying to put out. Maybe we didn't get in. Is this lying? No, this is lying. I swear we got in. But regardless, you know, a nice little resistance level there that started quite nicely. I want to have a quick look at Cineworld before we finish. I wasn't around yesterday to dive into this, but obviously filed for bankruptcy. I'm not sure if the guys mentioned about that, but I mean, it fell off an absolute cliff. I think we had some guidance at this point. That was the last I talked about it on the 17th. But then obviously bankruptcy can do the rest of the damage. So only down 13% today. I say only. That's because of how steeply it's fallen. It's actually down best part of 87% in the last week or so. So sad to see. We do like Cineworld. Finishing off on Man United. Look at this. Moving upwards steadily. Up the table. Up in the stocks. Love to see that.
Well, yes, yesterday's price action doesn't, or today's price action doesn't look that great.
That is true. We've gapped down. Maybe we were expecting a bigger win against Liverpool, and it's actually coming below expectations. So yeah, we'll keep an eye on that. Obviously, we had the Elon Musk saying he'll buy it, but Elon Musk says he'll do a lot of things. So wait till I see it.
Okay,
Excellent.
lovely. Thank you, Jamie. Right, let's move on to the gun to the head challenge. So this is where each of us pick a trade idea live on the video. Just a bit of fun. Obviously, keep reiterating that, but we're just coming up with an idea that we think may have a chance of working out between now and 9 o'clock tonight when we expire these ideas, or they will obviously close off if they hit the stops or the targets in that time. All of the ideas must have stops and targets. Obviously, risk management, very important when trading, and all these ideas are placed at market. If anybody ever wants to check them out, then it's very easy to do so. You can follow our TradingView profile, which is signal_center, which is also where you'll find these streams if you're watching them on any other venues. So they're all here for people to see, all time stamped. Nothing to hide, nowhere to go. So yesterday we did a couple of trades. Jamie wasn't in, as he mentioned. I went short of Bitcoin, looking for this bearish flag to play out. Steve again mentioned that this morning on his analysis of Bitcoin. It didn't really go anywhere. We didn't see the break. It wasn't a confirmed flag anyway because it hadn't broken below it and pretty much just stayed in quite a tight range. So I was on side on that by around 0.5%, I think, yesterday, or half an hour. Not even that, actually, 0.29R. So still quite fancy that, actually. It may return. Steve went short of the S&P 500, and his run continues. A really nice win for you yesterday, Steve. Let's click the play button to see how it played out. As you can see, it has actually gone on to reach your target after 9 o'clock, but at 9 o'clock it's pretty close to the lows, meaning you made 2.25R yesterday on your trade. So well done to you.
Nice, Steve.
Thank you.
So we've got to go again, guys. It looks as though a few markets are already trading at extremes, which does limit the opportunities, I think, a little bit for us today, maybe. But we've got to try and find something because there's a gun to our head. So who wants to go first? Steve, I can see you've got something ready.
Yeah, I don't mind going first. I'm looking at Bitcoin, this bearish flag formation. I'm not going quite as aggressive. I've given it a bit of room on the stop, so I'm sort of like thinking, come on, Steve, be a bit more aggressive than that. So I'll give it just a 500-point stop. And the measured move target is down to the 18th of June swing low. The measured move target for the flag is a little bit lower than that. But my target for the trade idea is 18th, just in front of the 18th of June swing low. Realistically, it's not going to probably get there today. But I think it's definitely a trade. If you
never know, mate.
Yeah, you give it a little bit more room on the stop. I think it's a pretty decent trade idea. But it may take a lot longer to play out, and you should give it more room for the purpose of the risk reward. I'm going to go a little bit more aggressive on the stop. Hope that explains everything.
Yeah,
there you go. I haven't even given the levels, have I?
No.
Selling at 21,165. Targeting a move to 17,665, and the stop is 500 points higher, 21,665.
Very nice.
Wow. Yeah, that would be very nice if that comes in. And based on the form you're on at the moment, Steve, I wouldn't bet against it. So best of luck to you. Jamie, have you got one ready?
I do, and you say you wouldn't bet against it, Joe, but I actually will. I kind of take a bit of an opposite side, kind of hedging. This is XRP or Ripple. Look, to me, this sell-off does suggest, look, we're going to get another sell-off. I think today we can get good risk-reward trying to buy it at this support level, and I don't think it will hold. It might break today and I'll get stopped out, but if it does hold today, and I only need it to hold till 9 o'clock, we can get a pretty decent risk reward out of it, as I say. So I also like to think of us three as a bit of a team on this show. You know, if mine doesn't work, that means kind of Steve's will work. So we all end up kind of happy, except me. But that's fine. So we're going to actually look to buy this, as I say, at current price, which is 0.3352. Is that 52? Yeah, there we go. Take profit will be at this previous kind of resistance level here, which is 0.3481, and the stop is nice and tight. As I say, if we get below these lows we've seen, the trade idea is null and void, it's over. So we're going to keep that tight at 0.3307. So that gives us, if we do get that play out today, it's 2.87R. Like I say, I think the move is lower here in the kind of even short term, but we've got a decent support level on the intraday basis, and I'm just looking for it to hold for today. So that's my trade idea there.
Okay, good luck. Right, so I'm going to take a look at DAX, and I think my options are quite limited, really. I did like the Bitcoin idea that Steve's published, so let's see how that plays out. But looking at the DAX, it's been obviously on a bit of a move to the downside following a very nice rally that we saw take place over the last couple of weeks or so. Over the last hour, we've seen a decent push to the upside. I think that may be something to do with the PMIs that have just come out. But I don't expect it will be anything substantial enough to reverse course in direction in the short term. So I'm actually going to try and sell it now based on this push to the upside that we've seen. So it's currently trading at 13,222. I'm targeting a move down to 13,030, which is the previous swing lows that we hit here in July, the 26th of July. And I'm going to place a stop loss at 13,302. Giving me a risk reward ratio of 2.49. So looking for more downside on the DAX. As you can see here on the watch list, a couple of these European indices have just turned green temporarily, but I'm not sure there's enough both technically and fundamentally to see this reverse course in the very short term. But obviously things could change very quickly. So there's the 3 trade ideas for today. They'll all be published up on our TradingView profile if you want to check them out and follow their path throughout the trading session. And in terms of data today, there are a few bits out, as we mentioned, most notably these PMIs. So the German one's already out. The UK PMI index is out in an hour or so's time at 9:30. So a few bits to keep us interested today. Just going to see if I can find the German PMI number. Looks as though that came in at 49.7, which is actually above expectations from what I can see here. So that's maybe why we've seen that little bit of a push higher in the German index over the last 30 minutes or so. Later on in the week, we've got the US PMIs that's due out. Actually, that's due out today. It should be on the top line, so we'll keep an eye out for that as well. Then we've got the Jackson Hole Symposium starting on the 25th, and most notably looking out for that Fed chair speech that will be on the 26th. So I think that's pretty much it. There was a message on the stream from Solomon about requesting access to our website to get a demo. Sadly, Solomon, we don't provide demos to individual users at this moment in time. That's something that we are working on. The way that we actually work is that we provide content directly to brokers. So there's a number of brokers out there that you will be able to find our content from. And if you want to send us a direct message on TradingView, we're more than happy to maybe guide you in the direction of a few of those places where you can find our intraday analysis on a regular basis. Yeah, hopefully that will answer your question. In terms of education, some of these brokers also provide education directly from us as well, so we can yeah, try and guide you down the right path.
The YouTube channel probably has some decent stuff on there. When we did a lot of lockdown videos, so
Yes.
have a look at the YouTube channel, and you'll see some lockdown videos, and maybe there's a way we can get them on TradingView.
Yeah, quite possibly. We'll look into that. It's a good point, actually, Steve. So if you go to our YouTube channel, Signal Center, on the playlists, you will see, obviously, we've got all the Talking Ball videos that we've done previously, but there are some lockdown specials in there, which are hopefully very informative and a lot of educational content on there. There's quite a few videos that you can run through. So please feel free to check those out as well.
We're not advertising YouTube or our channel. We're just sort of like saying they're on there.
Yes.
The best education is tuning in every morning, and we will answer all your educational questions on TradingView.
We'll certainly do our best, yes. And Solomon, thank you very much for those coins.
Built by traders
Much
for
appreciated.
traders, whatever the slogan.
Yeah, thanks, Solomon. Appreciate that.
Okay, gents, I think that's pretty much that. So let's wrap it up, and we will be back tomorrow morning.
Cheers.
Have a good one. Bye-bye.